Hi again. This time I'd like to cover a little bit deeper about what FarmMaximizer is. FarmMaximizer is a farm managerial program. It's a special tool that helps farmers make decisions easier because it is a model to guide them forward. It is never 100% accurate, nor should it ever be. It would become too onerous. The goal is to make the model believable for you and the farmer to base decisions on. This model should be on an accrual crop year basis, meaning that income and expenses are allocated to its proper year. It should be one business unit. So I want you to include personal land, operating company, machine co's, land co's, uncle, brother, whatever it is, they farm as a unit. Let's get this farm as profitable as possible and let the accountant divide the profit amongst the shareholders to minimize taxes. We use market values for assets. We want the ROI, or return on investment, to be based on current market values. How is this different than what you'd get from an accountant? Well, they require documentation and strive for 100% accuracy. And their reports are what happened. And so you would be making decisions using a rearview mirror. And for tax purposes, an accountant will break them into units to each participant to file, or maybe to maximize small business preferred rates. They report income on cash receipts, so they're including last year's inventory being sold this year, but then they make a calculated inventory adjustment. They use book values in their financial statements, so land will be listed at cost even if it was 20 or 30 years old. And they use depreciation rates to minimize tax, not reflect market values. So FarmMaximizer is a valuable tool that your clients will appreciate regardless of how the markets are doing. And it's different than they get from the accountant. This is something they can base decisions on moving forward. It can become the foundation for them because it answers the question, how am I doing and what should I change? So when a big decision is to be made on the farm, they will want to have it run through the model first to measure the impact. And this can be a powerful client retention tool. Okay, so now let's switch to how Farm Maximizer is structured to be a farm managerial tool. First, let's do a little financial refresher. A balance sheet is a snapshot based on a particular day, as an example, December 31st, 2022, and it's comprised of assets and liabilities, which includes cash, inventory, etc. And assets minus liabilities equals equity. An income statement, though, is something that happens over a period of time. So it's not a snapshot in a moment of time. It is for the year ending December 31st, 2023. So it's comprised of income and expenses. And so income minus expenses equals profit. So a balance sheet as of December 31st, 2022 will have an equity starting position. And when you add the profit from that income statement for the year of 2023, it's going to equal the equity of the balance sheet of 2023. So they are connected. You have your starting balance sheet, your year of profit, and it creates an ending balance sheet. And an ending balance sheet for 2022 is the starting position for the 2023 income. So we do this in Farm Maximizer. We have a net worth starting position, and it's in the net worth section of the program. So this would be your starting balance sheet for 2023 would be the ending balance sheet for 2022. And it's going to comprise of working capital, assets, and liabilities. We also have the income statement, which is in the operation side of the program. So we're going to put in for the year their grain budgets. What is that? Income. We're going to put in expenses for the year. What is that? Input costs, overhead, and cash outflow. So we're doing this in Farm Maximizer in its sections. Net worth is starting position of the year, and operations is the income for the year. Now, a thing about expenses versus cash flow. When we look at expenses, most expenses are a cash outflow, but not all of them. Depreciation is an expense, but it's not a cash outflow. It's not something that you pay out of your cash out of your bank account in a given year, but it does affect your cash over time with the way that you purchase an asset for 100% of its value, and then in 5 years it might be 80% of its value. So it is an expense, but not a cash outflow. Not all cash outflows are expenses, but they're really critical to be paid. Because how long can a farm operate without making a loan payment? The principal portion of a loan is not an expense. And if it runs out of cash, how long can it operate without paying the fuel bill? And how long can a farm operate if the owner can't pay themselves a wage to fund their family? So when we look at cash surplus versus net profit, when we talk about this, net profit in this case for this farm needs to be $13.19 an acre for the cash surplus to be zero at a break even. And the reason that is because typically principal and owner's draw are larger than depreciation. In this case, they are $109,000 difference, so that extra $13 an acre is needed so that he can pay all the bills and himself and the bank. So when I talk about a break-even price, I'm not talking about for this farm to have a profit of zero. I'm talking about having a cash surplus that is at the worst zero, because we do need to have the farm being able to pay all of its bills. So on the grain budgets page, and we talk about break-even prices, the overhead I am showing is based on cash outflow, not expenses that determine profitability. Okay, so when I talk about making FarmMaximizer a model of a client's farm, it would start with just modeling the income statement. Over time, your clients may want to increase the model's representation of the farm by including its financial starting position. That may be above and beyond what your agreement with the farmer is for the price he's paying you. But there are times when a great operational plan is not a feasible plan because the farm doesn't have the starting balance sheet to support that plan. An example would be a farm that goes from 2,000 acres to 5,000 acres is not likely going to be able to fund the inputs and the equipment injection that it needs to pull it all off. So that's where a starting balance sheet is going to help show the shortcomings of a plan. This is more advanced use of the program, but the program is built so that even though we're starting off with just an annual income statement for the farm, and you can do the full advisory that you need to do with the farm based on that with the marketing, but over time that farm may want to improve that model to be a larger representation of its farm, and the program will support you in that. And that will be for future videos. I hope this helps. Thank you for watching.